Hello everybody and welcome back to the channel and this video where we'll be running over 4 clean energy ETFs. So this is the second in the series of ETFs that focus on this particular sector. We have today selected ACES, which is the Alps Clean Energy ETF that invest in various clean energy companies in the US and Canada. We have FAN, First Trust Global Wind Energy ETF. As the name suggests, it focuses on the wind energy. You have SMOG here, VANEC Vector's Low Carbon Energy ETF. So again, a low carbon energy focus, so different types of companies. And you have PBF, Invesco Global Clean Energy ETF. That is also a diversified type of ETF that invest in a lot of different companies that focus on cleaner energy conservation and efficiency. So first we want to know a little bit about the liquidity of the ETF. So we look at the median bid-ask spread, which shows the difference between highest price buyers willing to pay and the lowest price that a seller is willing to accept. And if this percentage is high, it means that it's not that liquid. If it's low, it means that it's liquid. So we can see here across the board that all of them are relatively liquid. SMOG has 0.71, but it's not that much. The next is the beta ratio, which just shows the volatility in relation to the overall market. And if it's above 1, it's more volatile than the general market. We can see the only one that is less volatile than the general market is the FAN one here on 0.89. The last part is the tracking error, which shows the divergence between the price behavior of the ETF and the price behavior of the underlying index. And by no surprise, these ones are not as close as, for example, if you invest in one that follows the S&P 500 index. But 15 to 20% is still relatively okay overall. We then want to understand also the asset under management and the average volume. So we can see asset under management, ACES is by far the biggest with 436 million. The smallest is PBD with 124 million. We are also interested in understanding the average volume, which shows the number of shares that are traded on average per day. And this is again to see how liquid it is. So if there's a lot of shares being traded every day, it's relatively liquid. If it's very low, it is more illiquid. So we can see here ACES, FAN and PBD are relatively liquid, but SMOG, it's only 9,000 shares per day. So it's not that many. But in general, for the three others, they are relatively liquid, no issues there. So one thing that we think is very important when we're investing in ETF is to understand the risk exposure from a country perspective and understand how diversified the ETF is. And as we can see here, ACES is not that diversified. It is focusing on the United States and Canada. FAN, very diversified. SMOG, less diversified. There's quite a few countries, but the majority is definitely United States and Denmark. And the last one is PBD, which is relatively diversified, but it also has naturally an emphasis in the United States and China, but overall it looks quite okay here. The second part is to understand the top 10 company holdings. This is even more important for us when we are evaluating ETF because we want to see which kind of companies are the ETF focusing on, and is it companies that we feel confident in. We may of course not know all the companies, but as you can see here with ACES, we have run over another separate video, Sunrun, Enphase, Plug Power, First Solar and Tesla. So we have quite a good idea on these companies. FAN, a little bit more unknown. We haven't touched too much upon the wind industry, but maybe we will do that in some future videos because it's also an industry that is expected to boom significantly over the next years. You have SMOG here, you have a big exposure to Orsted from Denmark and Vestas, which is also from Denmark. You have Tesla, you have Microchip. So again, quite heavily focused on Denmark and the US, but quite diversified in terms of different companies. You also have SolarEdge that we have covered in a separate video and Enphase. And then in the end we have PBD here, again very diversified company. You have some solar companies, you have some electrical vehicles, you have DAQO, which we covered in a recent video, who is supplying materials to the solar industry. So this one is the most diversified one of all the ETFs, because as you can see, the biggest portion that they're having is 2.80% in Jinko Solar. So again, very diversified from a company perspective compared to the three others. So just to recap what we have gone over so far, first we looked at the industry focus. You had clean energy, wind, clean energy, clean energy. So some of them quite diversified and one of them very specific. In terms of the risk beta track error, we think it's medium overall. Not huge exposure, but it's not low risk as well. On the liquidity side, ACES and FAN and PBD are low, and SMOG is medium. Again, it has less shares traded per day, and the medium bid-ask spread is higher than the others. We also looked at the country diversification. For ACES it was low, FAN was high, SMOG was medium, and PBD was high. Similar on the stock diversification, we felt in general that the first three were medium, while as PBD was high. The highest position was, as we just mentioned, Jinko Solar with 2.80%. We then obviously want to understand how these ETFs has been performing, and if we look at ACES, we can see there's only result for the last 2 years, that is since the inception of the ETF, and it has performed very well over the 2 years. FAN, on the other hand, has been doing quite okay, but not fantastic. It's the worst performing of all of them, but in bad years it's a bit more stable than at least SMOG and PBD. If you look at SMOG, it has been done relatively well, especially the last year, of course, and a similar story to PBD. If we look from a 52-week high, we can see that almost all of them are close or at the 52-week high. And again, this is also confirmed if we look at the simple moving average for 20, 50, and 200 days. All of them are in uptrend. And again, really good signals. Not a big surprise given the attention that renewables are getting these days. Biden as a president is expected to have a positive impact. China has aggressive targets. European Union has aggressive targets. And all of this will naturally benefit renewable companies. So we always think it's good to look a little bit on the short term and also the medium term. In this particular case with ACES, you only have for the last 2 years. And here we are just benchmarking against the performance. And we are saying, okay, what if you invested $10,000 1 year ago? How much return would you have today? One of the important things to consider is obvious to add the dividends. So we have done this. And also the total expense ratio, which is the annual ETF cost that is taken from your account to pay the fund's total expenses. And as we've covered in separate videos where we are benchmarking ETFs with index funds and mutual index funds, again, these ones can creep up and they can really make a difference in the end of the day, especially if you keep it for a long period, let's just say 30 years. So it's something that seems small, but it has a big impact in the end of the day, and you therefore clearly need to understand how much you're going to pay, because it is the thing that in the end of the day can make a difference. So as we just mentioned, they have been doing really well the last year. You can see most of them will have returned around 100+%, with the exception of FAN, who has only given 60%, but it's looking quite well across the board. If we then look in a little bit more the medium term, for the last 6 years, we have obviously not included ACES in this one. We're looking at FAN, SMOG, PBD, and comparing that to an ETF that tracks the S&P 500 index. And similar to the most recent video that we have on this, it's quite interesting to see that for a long time the S&P 500 were actually performing better than these ETFs, but then in the last year these ones have just exploded. So we can see that VOO, which is the S&P 500 index, over a 6-year period has performed the worst, but more stable than the others. Next is FAN, and then we have SMOG, and finally we have PBD, who has been performing the best over a 6-year period. So back to our recap ranking overview, we first looked at the total expense ratio. FAN and SMOG are the cheapest, followed by ACES and PBD. Again, there's relatively little difference between these ETF and ratios, but there is still a difference. The dividend yield, FAN is giving the best, followed by PBD, SMOG, and ACES. The performance for the last year, PBD has been doing the best, followed by ACES, SMOG, and FAN had significantly been underperforming. And if we look for the last 6 years, PBD has again done the best, followed by SMOG and FAN. Last, we looked at the trend, and all these ETFs are in an uptrend as of today. So what is our verdict on these ETFs? Well, first of all, there's a good outlook for all these ETFs. They are focusing on industries and sectors that have a huge focus and will have a huge focus for the next decades. If we should select one above the other, the one we like the most is PBD. It gives you a great country and company diversification. It is a bit volatile, but it has performed well, and we have good expectation for this ETF going forward. If we look at ACES, is the second one. It has a very good performance for the first 2 years, and we like the top 10 portfolio of the companies that they were showing to us. As mentioned earlier, we have run over a lot of them, and we think a lot of them has great perspectives going forward. The next one is SMOG. It has also performed very well, but what distinguishes that from the others is just that we prefer the portfolios of the others a little bit more than the one of SMOG, but again, it's not bad at all. It's just a matter of preference. And finally, FAN. It has definitely been less volatile in the last 6 years. However, despite the good outlook, it has performed less well than the 3 others that we have covered. And in general, we are just a bit more interested in getting a bit of diversification in terms of different sectors, and FAN is only focused on the wind industry. So these ETFs have been performing really well, and they are very well close to the 52-week high. If you're focusing on short-term trading, maybe you want to wait for a pullback before you enter into any of those. If you're a long-term investor, we would not be concerned to invest in any of these. We think they have great outlooks and they will provide great returns over the next decade. This was all we had for today. We really hope you enjoyed this video. Please subscribe for future content. Please like the video. Please give a comment down. We always appreciate to discuss with you guys. You have very interesting perspectives. Remember that we are not professional financial advisors, and we only do this for entertainment purposes. You need to do your own due diligence before you take an active investment decision. Until then, have a great day. See you next time. Bye.